penny stocks are often misunderstood. Let us break down what they are and why they carry unique risks for new investors. Formerly known as microcap or nanocap stocks, these represent companies with very small market capitalizations. While the definition varies, the SEC typically classifies stocks trading under $5 as penny stocks. These stocks often lack deep trading volume, meaning it can be difficult to find a buyer when you want to sell. Unlike stable blue-chip companies, penny stocks often have less rigorous reporting requirements, which increases the risk for retail investors. Major exchanges require strict financial disclosures, while many penny stocks trade on over-the-counter markets with much lower transparency. Due to the extreme risk of total loss, many experts suggest avoiding these assets entirely when building a long-term portfolio. Thanks for watching. Always do your own research before placing a trade. Subscribe for more financial basics.